BlackRock is stacking Bitcoin like never before. Their IBIT spot ETF just crossed 700,000 Bitcoin under management. That's roughly 3.3% of the total supply that will ever exist. So the big question is, are we about to run out of Bitcoin? In this video, we're diving into why BlackRock is accumulating so aggressively, what this means for the crypto market, and whether we're on the brink of a real supply shock. Let's rewind for a second. Since early 2024, the US has allowed Bitcoin spot ETFs. For many, that was a game changer. Institutions can now get Bitcoin exposure without worrying about wallets, keys, or custody. And leading the ETF race? It's not even close. BlackRock's IBIT is dominating. Just days ago, IBIT passed 700,000 Bitcoin. To put that into perspective, the hard cap for Bitcoin is 21 million. And a huge chunk of that is already lost or permanently inaccessible. So IBIT already holds a meaningful slice of the total supply, and the inflows aren't slowing down. Over $53 billion has poured into the ETF so far. No other spot product even comes close. So are institutions so heavily loading up on IBIT? One word: trust. BlackRock is the biggest asset manager in the world, with an unmatched reputation. Add to that low fees and massive daily liquidity, and you've got a perfect entry point for big money. Some days, hundreds of millions of dollars flow into IBIT alone. Now, here's the kicker. The market data is crystal clear. In 2025 alone, institutional players like BlackRock and MicroStrategy have bought over $30 billion of Bitcoin. Meaning miners have only produced around $8 billion in new coins during that same period. So demand is far outpacing supply, and that's a recipe for scarcity. Many analysts are already warning of a potential supply shock when demand increases but supply stays fixed or even shrinks. Price usually has only one way to go: up. That's why price targets are getting more ambitious. Some experts are calling for a $200,000 Bitcoin. Others even mention $1 million, in the long run at least. And if IBIT continues to accumulate at this pace, BlackRock could surpass the estimated holdings of Satoshi Nakamoto by mid-2026, believed to be around 1.1 million Bitcoin. But IBIT isn't just a success story for the market. It's a gold mine for BlackRock itself. The ETF is already generating around $186 million annuals in fees, making it one of the most profitable products in their entire portfolio. Still, this raises an important question. Is this good for Bitcoin? On the one hand, institutional demand brings price support and stability. On the other, more and more Bitcoin is being concentrated in a few hands, which goes against Bitcoin's original decentralized ethos. What's clear, supply is growing slower than ever, while demand, from both institutional and retail, keeps climbing. And that's the kind of setup that can drive price over the long haul. So what do you think? Are we really heading towards a Bitcoin supply shock? Drop your thoughts in the comments. If you found this video helpful, hit the like button, subscribe, and tap the bell so you never miss a crypto update.